Within the last 24 hours, we have seen both the monthly candle close and the Federal Reserve interest rate decision. In today's video, we're going to be discussing how these events have impacted the market, what we expect to happen on the short term, and how the macro charts are developing. Let's go ahead and dive in. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning in. I hope you're all having a fantastic week. In today's video, we're going to be going over the next expected move for Bitcoin on the short term, how the macro charts are developing, the recent monthly candle close, and the Federal Reserve interest rate decision, what it means to the market, and what the result was. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, join our VIP group. It is, of course, our trading setup group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, our trading chart and education chat, our news, our help, our daily video, and our trade setup chat. If you're interested in getting access to all of that, contact us in the pinned comment of the free channel, or join us now as we do have a sale ending in 24 hours. Let's go ahead, guys, and jump into the video. So starting on that market data, 24-hour volume is up 11.13%, sitting at a total of 106 billion. 24-hour liquidations are up a total of 43%, sitting at quite a large number at 170 million, with 133 million in long liquidations and 36 million in short liquidations. Now, this could have been a result of the overall expectation that the Federal Reserve announcement was going to be relatively bullish. It was relatively bullish. However, the market did correct to the short term toward that downside, liquidating what it seems to be quite a large number of people jumping into preemptive longs prior to that breakout of the 44.25k resistance that would have facilitated a continuation upwards. So we did see a bit of a correction moving into that Federal Reserve interest rate decision, followed by a run up moving into it, likely trapping a lot of people into longs just before that announcement, and then we saw a correction as followed, now liquidating all of those late longs. And we did say in our Telegram yesterday, we do say every single month, if you are trading interest rate decisions, if you are trading any significant news events, it is always better to wait and then react rather than gambling, because at the end of the day, you're trading based on a news result or a result that you can't predict. At the end of the day, it is something that is unpredictable. You don't have the information until the public gets access to it. And as a individual trader, as a retail investor or trader, you get access to that information literally last. So you're going up against all of the funds, all of the insiders, trading a market that at the end of the day is going to be heavily influenced and manipulated at that particular time. So I always avoid news events. I never ever trade them for that reason, because I've identified and realized that my overall edge is not high during these times. Volatility is very high, bot trading, manipulation is very high, and sometimes it's best to just sit it out. So that is what we saw, guys. Moving over to the data, we can see with the Federal Reserve interest rate, we actually saw no change. So there was no hike, there was no decrease, it was no change. The overall narrative is still moving towards potential eases in the future. So we're still looking to reduce interest rates in the future. Jerome Powell did say that they're not likely to do so in the next period, which is going to be in March. However, they are likely to do so during the 2024 period. So overall, the narrative is still very much bullish. Moving over to the broader market, so DXY. It did see a little bit of a pullback on the short term, again retesting that range of support between that base of support represented by that green level and of course our 50 EMA represented by that orange line. So we can see we retested that level again and bounced back upwards. Again, if we do lose this level of support, we expect a correction downwards. While we remain above this level of support, we could see a continuation upward to 105 to 105.5. Overall, it is still above support. Therefore, it is still in an overall uptrend. Looking at the broader markets, the S&P 500 did see a little bit of a pullback on that Federal Reserve announcement. Again, I think a lot of people were expecting a ease this period, so we did see a lot of preemptive movements upwards, and then we have seen that no change, and then again Jerome Powell announcing that we'll likely not see a ease until later in the year has resulted in a little bit of a pullback. The overall narrative on the higher time frame is still bullish, but on the short term, I guess the market didn't get what it was expecting, and we have seen a little bit of a pullback here for the S&P 500. Again, nothing substantial at all. We did reach that 4,900 target, which is good. We still have that base of support represented by this local low. Provided we hold this local low, the overall trajectory is still upward. Moving over to the Dow Jones, exactly the same thing over here, guys. We did take a move upwards to retest or test that 38,700 level, just shy of that 39k psychological resistance. Once more, a little bit of a pullback on the short term. Provided we hold this local low, we are still looking pretty decent. We lose this local low, we can see a correction downwards. So that is enough about that, guys. Let's go ahead and jump over to Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. So let's jump into it, guys. We have a lot to talk about, and first and foremost, let's discuss that monthly candle close. So jumping over really quickly to a monthly chart, we can see the monthly candle closed at a price of $42,579. That is the price we closed at. So let's discuss what that means on the macro chart and how we are looking at the 4-year cycle, and more importantly, the monthly structural levels moving from here. So as we know, guys, we have about 70 or so days left until the halving event. The halving event is supposed to occur within April. So we have February, we have March, and then we're in the month of the halving. So we've got 2 months remaining. At the moment, the monthly candle close for January was a green close. It was a green close with, as you can see, a large upward wick and a large downward wick. What does that represent? It represents two things. Number one, it represents after a large upward move, it represents a period of indecision, as well as a period where both the bears and the bulls took over in strength. So mostly an area of indecision and large volatility. Generally, when we see these moves, it represents one of two things. We're going to see a reversal, or number two, we're going to see a continuation. Obviously, that sounds stupid, right? We're up or down. But in this instance, when we apply the contextual analysis, you'll see what I mean in a second. So when we look at the monthly chart, specifically the halving event, factoring in our horizontal levels, it gives us this 2-month window. We've been discussing this 2-month window now for a while. This 2-month window between where the price action is currently sitting and where the halving event is. Now, why do I keep bringing up the halving event? If we look at the halving event is represented by these vertical green lines, this one over here, okay, this one over here, and this one over here. We can see on the price action chart, we only ever see a monthly candle close above that dotted trend line after the halving event. Once we close a monthly candle above that dotted trend line, if we look at the trend angle from that point of the close to the point of the all-time high, the trend angle from the absolute bottom to the point of the dotted trend line, we can compare the angles of the trends, we can see that we have a significant increase in the trend angle after the dotted trend line break. What does that mean? It represents an extended yearly period, okay, a large time frame period where we have increased volume, increased velocity, and increased momentum as a consequence of more confidence in the market and aggressive buying over a period of time, which is what a bull run really is, right? When we see an extended, aggressive trend over a long period of time, that is really what a bull run is. So when we look at this chart over here, we can say when we break that monthly candle close above that dotted trend line, that is when the bull run is going to really start to kick off. So it gives us this 2-month window, and this 2-month window is expected to do two things. Number one, potentially see a correction, provided the correction doesn't drop below 32K. It doesn't matter. If we look at prior cycles, we can see that horizontal base of support, we never ever broke a monthly candle back below it after retesting the dotted trend line. So we retested a dotted trend line, we never retested that horizontal trend line. We went up, we retested a dotted trend line, we came back down and retested. We never broke a monthly candle close back below it. Eventually, after a halving, we broke through that dotted trend line, entering a bull run. So according to the monthly candle close, the actual close itself wasn't very bullish. It wasn't very bearish. It was exactly as expected for the macro charts to develop, how we have seen in the past, that will eventually then lead into a bull run. So everything is going now according to plan. Everything is going as expected. We never expected a monthly candle close over 48K yet. We only expect that after April. So that leaves us to this big question, and that is, what is going to happen within this 2-month window? Are we going to see a correction, or are we just going to move sideways inevitably until we break through that dotted trend line? So let's go ahead, guys, and talk about that now on the higher time frame. So we're going to start on the 3-day chart just to identify our key high time frame supports and resistances, and then break it down. So if we take a look at this chart over here, this identifies our key levels of support and resistance. Of course, the most important level of resistance is going to be this area over here, the 48 to 46K level. More importantly, the 48K level, as it reflects or represents the upper level of resistance within that high time frame resistance zone. The 48K level is, of course, the monthly, but most importantly, the yearly resistance, which is, of course, a bull run trigger for a macro continuation upwards. Moving down from there, we have our support levels. We have our $38,000 to $40,000 support. Okay, we have our $34,000 to $36,000 support, and of course, then we have our major level of support, which is going to be the 32K level of support and the yearly long uptrending diagonal trend line. The 32K level of support and the yearly long uptrending diagonal trend line meet in a confluence point, as well as, if you look back to this chart, that horizontal black trend line on the base below the current price action is 32,000. So according to macro structural data, according to what we have seen in the past, it is unreasonable to assume we will ever see a monthly close below 32,000 if the price action develops as we have seen in prior cycles. That is first and foremost. Secondly, if we look at it from a structural perspective, we have to respect that the trend is your friend until it ends, and support is support until it is not. And therefore, the lowest reasonable target anyone should have right now, if you're bearish biased, if you're expecting corrections, would be a retest of 32K and the uptrending diagonal trend line, eventually until a break of that 40K level moving past April. Now, I don't think we'll see that. If we do, technically the trend is still up. Technically the macro trend looks healthy. Technically we are still bullish, even if we see that. But a lot needs to happen before we start talking about these lower levels of support and continuations downwards. So let's break it down to a smaller time frame. If we look at the daily chart, what we can see is a very clean bearish divergence. The bearish divergence, of course, where we have higher price action, higher highs, and we have lower highs on the RSI, representing a period of exhaustion, which results generally at levels of resistance and develops into rejections and reversals in the trend. That reversal took us down to our nearest level of support, which we did retest at 38 to 40K. We have since bounced from that level in the short term, developing a short-term uptrend. If we want to see a continuation upwards, we need to flip momentum back positive. We are objectively still now in a downtrend, okay? We were in a uptrend into resistance. The resistance has now proven itself as a resistance, we are now moving downwards from that resistance. So we are in a short-term downtrend, moving into support still, and the price is trying to reverse. That is what is happening. For us to actually see a reversal here, and for us to continue back into this 46 to 48k range, we absolutely need to see this RSI break upwards and flip positive. If we flip positive, the price action will follow the momentum, as momentum is a leading indicator, and we will likely see a retest of 46 to 48,000. Now, if we look at the chart from a structural perspective, we can see that while we remain above support, we have to assume support is going to act as support until it is not. So let's zoom now to our 4-hour chart and discuss key trigger levels, the current short-term movements, and the current trends you should be watching. So, very straightforward stuff. We'll break it down nice and simply, guys. We have our upper and lower trigger points. First and foremost, our lower trigger point is going to be this level over here, the 38k level. The 38k level is, of course, as we mentioned, the lower level of support of the 38 to 40k support range. Now, if we lose 38,000, we move downwards to 35.5, potentially 36k. That is what we are expecting if we lose 38,000. So this is going to be immediately a bearish trigger point. Awesome. Okay. Our upper trigger point is going to be 44.25. This is going to be the upper level of resistance that we retested for about 4 or 5 weeks. Okay, we even had deviation above before finally breaking upwards and moving to that 48k range. This area is a horizontal area of interest and will remain as an area of resistance and a trigger point for a continuation upwards, and thus a break of this level will result in a continuation back upwards to retest that 48k level, and more importantly, for us to break that level, as a consequence, we will likely see momentum turn positive on the daily chart as well, which will facilitate that continuation. So now we have seen a bounce from support, we have moved upwards into an area of resistance, the short-term price action is beginning to exhaust. If we look at the current trend is reflected by that diagonal black trend line. We can see we are still in a short-term uptrend. However, we are retesting this level, and we can see momentum is starting to drop. So we actually retest this area from point of weakness. If we do see a correction below this level, we would expect a move into our local area of support, which is sitting at that $40,000 to $40,700 level. Again, this area is acting as a short-term support level. A loss of this level results in a retest of 38,000, and this area will act as a bouncing point for Bitcoin. So if we do zoom out, we can see the overall trend for Bitcoin is now downwards. We are in a downtrend. The downtrend is trying to exhaust. The bulls are trying to bring back control. For them to officially do so, we need to break over 44.2k. We need to turn positive on the daily RSI, and that will facilitate a continuation back upwards. The charts would look immensely more healthy if we do see that. Until then, these areas of support are support until they are not. So it is unrealistic and it is illogical to have ridiculously low bearish targets while we have 3 major levels of support underneath us on the higher time frame and many short-term supports underneath us on the short-term time frame. We have to trade level by level at these points. Thanks for watching, guys. I hope you have a fantastic day, and we'll catch you guys in the next one. Sorry about today's video. It's a little bit of a short one, running out of time, but I'll see you guys next time. Cheers.